Good evening. My name is Mandy Albrecht, and I'm this year's chair of the VIP Distinguished Speaker Series. The VIP Distinguished Speaker Series is one of the many programs put on by the Undergraduate Business Council for the Red McCombs Business School. Today, we are joined by Dean Hartzelt, Senior Associate Dean of Academic Affairs of the Red McCombs Business School, and Mr. Walt W, President and CEO of Charles Schwab. We will begin tonight with an interview between Dean Hartzelt and Mr. Bettinger, and then we will open the floor to a Q&A from the audience. As a reminder, today's event will end promptly at 6:30, and we would greatly appreciate it if you could refrain from leaving early and using electronic devices. Dean Hartzelt, after receiving a doctorate in finance from McCombs, Hartzelt served as professor of finance at New York University for 3 years before returning to McCombs in 2001 as an associate professor in the Department of Finance. He has remained in the department until his recent appointment as senior associate dean. Our speaker, Mr. Bettinger, has served as president and chief executive officer of Charles Schwab Corporation and the member of the board of directors since 2008. He also serves as a member of the board of directors of Charles Schwab Bank and Charles Schwab Company, Inc., and the trustees of the Charles Schwab Family Funds, Schwab Investments, Schwab Capital Trust, and Schwab Annual Portfolios, along with many other registered investing companies. Prior to assuming his current role, he served as president and chief operating officer of the company. He also served as executive vice president and president, Charles Schwab Investors Service from 2005 until 2007, executive vice president and chief operating officer, individual enterprise from 2004 to 2005, executive vice president and president of corporate services from 2002 to 2004, and executive vice president of the retirement plan service from 2000 to 2002. Mr. Bettinger joined the company in 1995 as a part of an acquisition of the Hampton Company, which he founded in 1983. Please help me welcome Dean Hartzelt and Mr. Bettinger.
Thank you, Mandy. Can you all hear me? It's okay? So thanks, Mandy, for the introduction, and Walt, thanks so much for coming.
Jay, thank you for the invitation.
It's a real pleasure to have you here. As Mandy mentioned, our format's going to be, I'm going to have a few sort of fireside chat, words of wisdom questions, and then we'll open it up to the audience. And as our custom, we kind of do this on a chain basis where the previous VIP gets to ask the next VIP a question. So our holdover here is from the, Jeffrey Immelt from General Electric. And so his question to you, which we'll start off with, was, what would you like to tell every mom and pop investor out there as to why they should have faith in the stock markets, and more importantly, how can they prepare for their future?
Well, before I answer, let me just thank all of you for the opportunity to be here. It's a real honor to join you here at McCombs School and be part of your, I guess, VIP series. I don't think of myself as a VIP, but to be here as part of your speaker series. Now, the issue of trust in the markets is a very difficult one, and I think for the average investor, given what's gone on since 2008 with what many people refer to as the financial crisis, I tend to refer to it as a leadership crisis. But what's gone on since then, and then you see things like high-frequency trading and our markets rigged, and Michael Lewis's book, it's hard to have trust in the stock markets, but it remains the stock market is the single most effective way for the average individual to build wealth, to prepare their family and provide for their family out into the future. And so it's not perfect, as any institution that is run and led by human beings is not perfect, but it's still the best opportunity. I think in terms of investing for the typical investor, three things they should probably focus on. The first one is you have to diversify when it comes to investing. If somebody comes to you and they've got a hot idea or a stock tip or something like that, you should run as fast as you can, as far away from them as you possibly can, because they don't know. Unless they have inside information, in which case, as we say, I think you should run even faster, unless you like appearing in orange. So you don't want to believe someone with a tip or a suggestion or an idea. They don't really know what's going to happen, but diversify when you go to invest. The second thing is you have to stay in the market. The market goes up, the market goes down, the market got clobbered today, it'll probably bounce back tomorrow. You cannot time the market. Anyone who tells you they can time the market, I would also run far away from. There's millions of dollars, many more dollars have been made selling people newsletters and crazy ideas that someone could time the market than actually has been made successfully timing the market. Be in it, stay in it, don't get out, ride through the ups and downs for the long run. And then the third thing, which is I think just as important as the first two, keep your expenses low. There's only one certainty when it comes to investing, and that is you're going to pay fees. You're going to have some kind of cost. And the lower you can keep those fees, the more money stays in your pocket. So diversify, stay in the market, keep your costs low. Pretty simple, pretty straightforward, but those are time-tested philosophies that I think work for really any investor.
Great, thanks. We were talking before, and for those of you that are Macomb students, I think what you just heard was Finance 367 investments. So we teach it, we stretch it out a little bit.
Yes.
But if that were your final exam, that would be fine. I think, so.
I'm glad to hear that that's what you're teaching, because in too many places there's ideas of investing that are contrary to that, and they're really not successful long-term strategies. I give the example that if I had a quarter and I flipped it enough times in a row, eventually I'd get 10 heads. And if I stopped at the 10 straight heads, and if I stopped at the end of that and told you, hey, I figured out how to flip quarters and always get heads, my track record would prove that I could do that. But we all know that was just chance. And over enough flips, I'm going to get 50-50 of each. You can't time the market. You can't guess it. Follow Finance 367.
Thank you. Thanks for the advertisement. Yeah. And maybe you could talk a little bit before we go into your background, because I think it nest nicely with what you're doing at Charles Schwab to help investors understand and be educated and make more informed decisions. So back to your three principles, what kinds of things are you doing to help investors understand the investment process, understand kind of the decisions they're making?
Sure. Well, I guess let me try to take each one of those things. First, when it comes to diversification, although you can go to Schwab, and many people know Schwab as sort of the original discount brokerage firm and buy individual stocks, today the firm is much different than that, and we actually provide investment advisory services directly or through the organizations that we partner with to almost $1.25 trillion of assets. And very rarely in any of that type of advice is it based on individual stocks, individual equities. It's usually diversification. When it comes to staying in the market, we have a very simple philosophy, and that is that we want to align our interests with our clients' interests. So for example, when a client hires us to advise them on the investment of their portfolio and we charge a fee, we say very simply, if at any point in time you're unhappy with the quality of the advice that we've delivered or the service we've provided you, all you have to do is say so and we give you your money back. That's aligning ourselves on the side of the consumer, a very unique proposition. When it comes to cost, I don't think that there's any firm that operates more efficiently than we do that is publicly traded. So with $2.5 trillion in total client assets, we operate our entire firm at expenses of about 16/100ths of 1%. And what that allows us to do is offer, whether it's ETFs or investment advisory or mutual funds or any type of investment that people are looking for, at an extraordinarily low cost. Now, the low-cost provider is in a position to be able to deliver a better value to its clients, to its customers. And so we strive to operate incredibly efficiently so that we can pass those savings back to those who are investing with us.
Great, thank you. And maybe going back to your personal stories. And so, and it was in your bio that you started a company at a young age. Can you go back to kind of that first job, first experience, and how you persevered?
Sure. It was, so I had sort of an interesting beginning. I finished college when I was 21, and I worked for about a year and a half in the pension department of a large insurance company. And I had a little bit of success doing that work. And so I thought, well, this doesn't seem that difficult. I think I can go out on my own and start a business. It was 1983. I was 22 years old. I looked like I was 17. I shaved once a week, whether I needed to or not. And I thought, I'm going to have this great idea to go out and start calling on corporations and ask them to hire me to run their retirement plans. And I got a good wake-up call. I took my life savings, which was probably about $1,000 at the time, and I printed up these fancy brochures. I hand-typed out a bunch of addresses to mail these brochures out to corporations. We didn't have word processors then. I had an IBM Selectric typewriter, I think. I mailed them out, and I waited for all the phone calls to come pouring in of all these people that are going to hire me. About 3 weeks later, I hadn't gotten a single call. So then I started cold calling, I got in my 1976 four-door Ford Maverick and started driving around. I was in Ohio, driving around the Midwest, calling on corporations and industrial parks and getting those glass sliding doors slammed in my face. But it was an incredible experience. I went 12 months, cold called every day, all day long. At the end of 12 months, I had no clients and I had no revenue. I learned a lot from failure. I learned a lot about myself, learned a lot about perseverance. Was incredibly humbled in the process. But eventually, I think maybe someone took pity on me and they hired me, and then someone else, and then the firm became quite large over a period of time, and until eventually in 1995, Schwab acquired my firm. But it's a tremendous lesson that I took a lot out of in terms of we fail as human beings, but failure is not permanent. Failure is temporary. And we're not failures, but we might experience failure. It's what we do coming out of it and what lessons we take away from it that we can turn to the good.
Thank you. And so building on that, thinking about the experiences you've been through and lessons learned and maybe some characteristics you may have had that were innate at some level, to what would you attribute things that distinguish you from peers, or you end up at the top of a very big pyramid, and what perhaps you think got you to that point today?
I'd like to say I'm at the bottom of the pyramid, because if you're in a leadership role, your job is really to serve others as opposed to being served. I'd say there's probably two things that had an enormous impact in terms of differentiating, maybe myself. The first one was actually an experience that I had when I was a senior in college. Actually, the spring quarter of my last year, I was in a business strategy class. Those of you who are seniors are probably either taken it or have taken it or will. But it was a night class. We met once a week for about 4 hours. We take a couple breaks during that 4-hour period. And it came up to the final exam. And this final exam was really important to me because I had been a very driven person during college. I had a 4.0 GPA. I was very determined to graduate with that. And I had put in a huge amount of time studying, memorizing the formulas, going through the case studies. I was ready for this big final exam, really to do well on it, because I was focused on me. I was focused on myself and my own achievements. And I went in for the final exam, and the professor passed it out. It was a single piece of paper. I remember being surprised at how could this final exam, after all this time, be on one piece of paper. And he said, wait till I pass it out for everyone, and then I'll tell you to turn it over. And he did that, and go ahead and turn it over. And the other side was blank too. And the business strategy professor said, I've taught all of you everything I can about business in these last 10 weeks, but the single most important lesson, your final exam is, what is the name of the lady who cleans the building? And I remember I didn't know Dottie's name that night. I failed that exam, and I lost my 4-point GPA. But what I've tried to do is take a lesson from that and know every Dottie that I've ever come across ever since. And I think that lesson early in my time, wasn't really even in business yet, just getting ready to go out for my first job, had a big impact on me, remembering that it's not about how smart you are, it's not about how strategic you are, it's not about your ability to design what-if scenarios or war games versus competitors. Business ultimately is about people. It's about an interaction between human beings and people based on trust and respect and honorable serving to someone else. And so that had a huge impact on me. And then I think that probably the second thing is simply just based on drive. I was highly driven to, as I mentioned earlier, to not fail, to accept failure as a temporary issue rather than a permanent one, and just continued to push through very, very difficult times early in my career in the building of Hampton into success with, of course, incredibly talented people who joined me along the way. But that focus on people and an unwillingness to accept failure probably had as much impact as anything else in my career progression.
So what about things you'd still like to master, areas of improvement? What do you still work on personally that you think about, things you'd like to
Well, Mandy said we have till 6:30, right? So I've got 45 minutes to talk about my weaknesses. That may not be enough time.
Opportunities for improvement.
I'm too direct. My weaknesses. patience is a big one for me that I still need to be better at. Patience is something that in business and in this, even in this day and age in particular, is a challenge, right? I mean, shareholders, quarterly results, in our business, monthly metrics. Patience is important. But if we're really operating our businesses to create value for those we serve, which in turn then can create value for shareholders, we have to take a long-term view. And patience is probably an area that I can continue to become better and better at, is recognizing that some things take time and I need to allow that time to unfold.
And we talked a little before about, you mentioned the crisis, and Schwab fared amazingly well compared to your peers and your competitors. Can you talk about what set you apart during that period? What changed or what was viewed differently there that made it relatively successful? And then also as you go forward, how do you maintain your competitive advantages in the market?
I appreciate your confidence in me, Jay, that I can remember both of those parts. The financial crisis, or again, as I say, the leadership crisis, was an interesting time. If the decisions hadn't been made prior to that period that were going to help you through it, it was too late. There was really nothing you could do in the middle of it. And one of the things that was very, I think, effective for Schwab, and I don't take any credit for this is simply the long-term strategy of the company. We tried to operate the company in a conservative manner. I remember just probably a year or so before everything broke loose, an interview with a reporter. And this reporter came in and said, Walt, you guys are just not aggressive enough with the investing you do. Well, one of the ways that we make money at Schwab is we with our $2.5 trillion of client assets, we have a couple $100 billion of client cash. And clients can have their cash anytime they want it, any day, right? And so we pay them a yield on their cash based on you can get your money out anytime you want it. But because not everybody will want their $200 billion of cash at the same time, we can invest it out a little longer and capture a little spread. That's partly how we make money at Schwab. And so the reporters would come in there and say, Walt, you guys are stupid. You're investing too conservatively. I looked at your balance sheet. You got the money in U.S. Treasuries. You've got it in U.S. agency-backed paper. Let me show you what you should be doing. You should be buying these things called collateralized mortgage obligations. And these, which, by the way, at that time were not, they weren't a giggle word like they are now. And what I said to the reporter was, you're right. We could make more money today. But that's not our strategy. Our clients come to us because they expect us to be conservative and invest their money conservatively, and so when they want it, it's there. And so when the leadership crisis hit, when the financial crisis hit, and those kind of securities plummeted in value, we just continued right on. And for us, it was a huge market share opportunity. I mentioned earlier to Jay that from 2009 to 2012, we grew client assets at Schwab by $530 billion. Our four largest publicly traded competitors, Merrill Lynch, Morgan Stanley, TD Ameritrade, and E-Trade, added together grew by 320. Not because we were smarter than them during the crisis or anything like that, but because we had a strategy and we stuck to it and we didn't veer off based on what the environment was trying to tell us. The second part of your question?
Second part of the question is, how do you maintain your advantage? Competitive advantages, in my view, are based on strategy. And I always like to say, if it takes you more than one sentence to explain your strategy, you don't have one. Our strategy is very simple. It's 3 words, through clients' eyes. That's it, through clients' eyes. What we do at Schwab is every time we are faced with an issue, with a question, we ask ourselves very simply, what will this be, how will the decision we make be viewed through the eyes of our clients? And if it's something that they're going to view as a positive, that's what we should do. If it's something that's about our bottom line and not good for them, don't do it. That's a short-term perspective. And so that strategy through the client's eyes is timeless. It enables you to make it through all different environments, and it's a strategy that will work in the long term for us, one that we'll continue to execute on. And so something we talked a lot about in the last few years, I think partly spurred on by the crisis, have been thinking about things like corporate social responsibility, ethics. We struggle with how do we teach it. We know it's important. How do you instill it? So maybe you could touch on, and I think you're starting to hit on that with your themes of the thing about the clients.
Sure.
So,
well, corporations really are just collections of people, right? I mean, corporations are really not a living, breathing thing in and of itself. It's collections of people. So when you talk about corporate responsibility, I think what you're really talking about is the leadership of those companies. Again, every organization ultimately is simply a reflection of its leadership. And so if you look at the behavior of companies, what you're really evaluating is the behavior of the people in leadership roles in that company. So corporate responsibility comes down to the integrity, the ethics, the character of the people in leadership roles. And when we look at companies or we evaluate companies and we look at the role they play as a corporate citizen, I want to get to know the people who are making the decisions of that company. I want to get to know the CEO and the chairman of the board and the CFO as people. I know they're smart. They don't get to that kind of position without being smart. I want to know about their character and their integrity, and that, in my mind, is going to give us the most look into what type of corporate citizens are going to be, how they're going to behave in their community, how they're going to treat the people who work for them. Those are the things that really matter, understanding the people in the leadership roles.
Could you share some thoughts along those lines on how you maintain that culture at Schwab and how you keep that going?
Yeah. Well, Schwab's a cult, right? We care deeply about culture and about values, and it's not for everybody. We have a very, very simple philosophy, and that through client-side strategy. We really believe that if you do the right thing by people, they will choose to do more business with you. You don't have to coerce them. You don't have to trick them. You just have to do the right thing. And if you do the right thing, people will come to you. I mean, think of all of us in our lives. If we find that person who works on our car who does what they say, who's actually ready when they told us it would be ready, we go back to them. So do the right thing. And what we try to do in terms of leadership is make it a little bit more scientific. So we do very in-depth psychological profiles of anyone that we're considering promoting into either very senior roles or hiring into very senior roles. We actually do profiles on virtually every hire that we make in the company. But particularly for people in leadership roles, we really want to know what makes them tick. We want to know what matters to them. I mean, go back to the pyramid. I mean, are they pursuing the top of the pyramid because they want the trappings of what that means for them? Or do they really see that when you're in a leadership role, your job is to serve other people? Those are the kind of things we want to get people like that in leadership roles. That's what will continue the kind of culture of a company that puts clients first.
And how has the company evolved over time? How have things changed as you've gone through, explosive growth? Financial sector's changed a lot. We talked before about the changing, what I would think of as the democratization of investing.
It is.
You've had a bunch of very interesting trends going on in your business.
Well, it's fascinating. I mean, when Chuck started the firm over 40 years ago, it was a discount broker. I mean, it was a place that you went to buy and sell a stock for $70 when the competitors charged $300. And that's really what it was meant for. And of course, the company's evolved over the years to where today, as I mentioned earlier, we provide more advisory services to clients than there are people actually self-directed investors within Schwab. So the company has evolved dramatically from a discount broker to what I would call as more of a full-service investment firm, but delivering it at a great value, at a better value than virtually anywhere else in the market. And that's probably been the biggest evolution. Still to this day, there's a lot of people, they think of Charles Schwab, they think, oh, it's a discount brokerage firm, or oh, it's a cheap place to buy and sell a stock, as opposed to a company that provides advisory services on over $1 trillion in assets. So the company's evolved dramatically over the last 40 years, and I think that trend's going to continue on into the future, where more and more people are looking for professional assistance, but they want it simple, they want it straightforward, and they want it done at a really great value.
Thanks. And back to, I guess, insights or advice you might give, thinking about what advice you've received. So you mentioned the exam experience and how that changed things. What else, other nuggets of advice that stand out to you as being especially valuable even today?
Two things stand out for me. One, something that, very simple thing that my father told me. My father passed away last December. But one of the things that he shared with me early on when I started in business was he said that, Walt, virtually everything in this world is available for sale. It can be bought or sold. But one thing they can is a reputation. So always remember, in everything you do, that is a part of what builds that reputation. Every time you say something, is your word good? Do people know that what you say is what you'll do? Always stand behind that, but focus on a reputation. That's one thing that stands out. The other one is sort of a funny story, but a powerful one with respect to Chuck Schwab. So this goes back to right around the time that I was probably transitioning into the CEO role at Schwab, and we were faced with a really, really big strategic question in our company. I won't go into what it was, but it was a really big issue. Do we do A? Do we do B? Do we do C? And we put together a classic, and forgive me for all the MBA students in here, but we did a classic business school case study. We probably had a 120-page PowerPoint deck filled with colorful charts and graphs. It had the what-if scenarios. We war-gamed. If we do this, competitors will do that.
Two by two matrices.
Oh, absolutely.
Yeah.
It was classic. And I sat down with Chuck in his office to go through this analysis. And Chuck he's an amazing gentleman. Incredibly kind-hearted and soft-spoken, and he sat there, and I started going through, and I got to about page 3 or 4, and I could just tell he was chomping at the bit and anticipating me walking through these 120 pages, and he put his hand out on the table, and he said, "Walt," he goes, "let me just ask you a question. Forget the competitors, forget the war gaming, forget all the what-if scenarios. Which choice, A, B, or C, is the best thing for our client?" I said, well, obviously, if all we're focused on is what's best for the client, it's A. Go do A. Everything else will work out. And at the moment, as he said, it's almost like a light came on. Well, of course that's right. All this other stuff is a little bit irrelevant. Yeah, we'll make adjustments, and competitors will do what they do. But if we just do the right thing by our clients, everything else tends to work out. And that's what we did. I won't share what it was, but it certainly contributed to the market share gains that we've been able to make on our way to $2.5 trillion. So that bit of advice was powerful and simple and yet so clear. Do the right thing by your clients. The rest of the things tend to take care of themselves.
Those insights that after the fact seem so simple.
Yeah, would have saved us a lot of time on that PowerPoint deck, let me tell you that.
So we have obviously a lot of students in the room, and as they think about advancing out of the university, and they've been very successful, and then they're going on their job, worrying about how to be successful there. When you think about your management team or people you interact with at the firm, what makes people stand out there? How do you, when you evaluate them and think through, what are you looking for and thinking about? Sure.
It's an interesting question because it also ties into some of the mistakes I've made as a manager and leader over the years. When you get into business, and particularly if you start to progress, it sort of gets back to the thing I mentioned around everybody's smart. You're not going to outsmart people. You're not going to outthink people. What we really look for, what I really look for, is people who are great team players, people who are selfless, people who it's not about them. Those are the people that, in my experience, tend to do the best, at least within our firm. People that recognize that I'm more valuable if I help 3 or 4 other people be successful than if I'm just successful and squeeze them out of the way. So teamwork becomes so important when you're in an organization, and it's the trait that we look for. The true selflessness, back to the point I made, the people who really understand that leadership is about serving other people, not being served, and making sure that people are doing things for the right reasons, that their ambition is channeled toward helping other people be successful as opposed to getting themselves in a position where they've got some big title or a lot of zeros on their paycheck or something like that. That's not what we look for. That's not what I think most successful companies want. They want people that understand the power of teamwork and serving clients. That's what builds great businesses in the long term.
Right. I took on this new job in the business school. People ask me, what did you learn? What are you surprised? And I need to have a better answer because the answer that so-and-so is not a very nice person is not a very good answer. So what have you been surprised by as CEO over the last several years? Things that just took you back a little bit?
Sure. I think the most surprising thing to me is that this expectation that as a CEO of a large company of after today 37 billion market cap or something like that, but that you're different than anybody else, and I'm not. I mean, I'm like everybody else. I remember I went into had to stop in work on a Saturday a couple of months ago in the summer, and I went in my cargo shorts and a T-shirt and flip-flops, and the guy at the security desk was like, Walt, I didn't know you owned flip-flops. And I'm like, no, you don't understand. The suit is the fake thing. It's the cargo shorts and flip-flops that are really me. But I think that's what's probably most surprising is that we as a society can get all wrapped up in these titles and things like that and forget that we're just people, other people, and interacting with people. And that to me is a shock. What I try to do to counteract that is make sure that you do everything you possibly can in your power to break through that. There is nothing better that I get the opportunity to do in my job than to go to one of our service centers on a Saturday night at midnight with a box of donuts and thank the people that are working that graveyard shift and serving our clients 24/7, 365. I mean, that's the kind of thing in my job that is so rewarding and gives me that opportunity to thank those who are doing the real work in our company, making sure that they know just how appreciated they are. And it gives me an opportunity and them an opportunity to see that I am no different than them. We might have different jobs, but we're all here to do the same thing, and that's to serve our clients.
They freak out when you walk in?
Sometimes. Not as much now, but when I did that early on, they were a little bit surprised.
Great. Well, thanks so much, Walt. And
Absolutely.
Let's open it up for questions. We have mics down here, so if the students wouldn't mind coming down to the mic to ask the question so everybody can hear, that'd be great.
Hi. First of all, just thanks so much for coming. My name's Matt. I'm a student over at McCombs. But my question was, I was reading a little bit of articles about the robo-broker that's supposedly unveiling pretty soon. I was just kind of wondering about how that idea came to be and how the implementation moving forward is going to change Charles Schwab.
Yeah. No comment. I'm really not supposed to talk about it. I'll share a little bit, but we really are trying to keep it under wraps. In fact, the article that recently came out was laced with inaccuracies. But what really we're looking at here is in the traditional wealth management relationship, there's a whole tier of services that are provided. You've got trust development, goal planning, credibility establishment, objectives, and then you have asset allocation, rebalancing, tax loss harvesting, then ongoing goal planning, reestablishing risk parameters, playing psychiatrist when the market goes down. What the robos have done is they've just carved out the three simplest parts, which are asset allocation, rebalancing, and tax loss harvesting, and unbundled the pricing and slid them over here. That's all that's happened. And what you're going to see is you're going to see Schwab with a version of a solution like that, which is going to be better than what anybody else is able to offer in the marketplace. Not only better because of our history and our experience and our $2.5 trillion of assets, but we have a more efficient economic model and a much greater scale. So we're going to be able to deliver something that I think from an online advisory is going to shake the industry up quite a bit. It's not coming out in a couple of weeks. That was a made-up piece of that article. I don't know where the reporter came up with it, but it is coming out fairly soon.
Thank you.
Hi, thanks for being here. I'm sure you're very busy, so I was wondering if you had any advice in how students can balance their personal life with their professional life.
Sure. So, this is the work-life balance question, right, that comes up a lot. I like to say that there's really no such thing. What there is priorities. Don't tell me about work-life balance. Tell me about your priorities. Because where you spend your time is what matters to you. And I always encourage people, understand yourself, know what matters to you, and build your life around that. I was a workaholic early in my career, particularly when I was building Hampton. And it probably contributed in some ways to a loss of a first marriage I had. But as I lost that marriage, I took on responsibility for raising my 3 older children. They were 4, 1, and 1 at the time. And I made that my priority. And I continue to make it my priority all through my business career. In 2006, when Schwab spoke with me about becoming CEO, one of the things I said is, I'm not going to negotiate pay, I'm not going to negotiate a contract, but there's one thing. I can't be CEO if you want me to move to California from Ohio. because my middle children don't graduate high school until 2011, and I'm not going to ask them to make a choice between staying with me, moving to California, or seeing their mom. So if you need me to move to California, you need a different person to be CEO. Gratefully, Schwab's board cares enough about priorities that they made it possible for me to commute back and forth and stay in Ohio till 2011. But know your priorities and live your priorities. I mentioned earlier, in just speaking about this issue with some of your council members, my middle child, my son, is a senior in college this year. He's a scholarship basketball player at university, and he's played varsity basketball since he was a freshman in high school. I've missed probably 8 of his games in 7 years. That's my priority. That's more important than being CEO. And understand what your priorities are, and work-life balance solves itself because you live your life in the things that matter.
Thanks. Hi, my name is Christian. I'm a
Hi, Christian.
business honors freshman here at McCombs. And my question is, did you ever explicitly have the goal of becoming CEO? What exactly drove you to increase your leadership and responsibility at your company?
I didn't. I never really thought about being CEO until probably right around the time that the board of directors at Schwab asked me to consider moving into that role. I just wanted to do the best that I could. I wanted to serve clients. If things unfolded, they did. I mean, you got to remember, Schwab is a San Francisco-based company. I was living in Cleveland, Ohio, running that division, the division of the company that I had started and had sold to Schwab. So, being CEO and living in San Francisco was the furthest thing from my mind. I was just trying to do the right thing. What I was focused on, though, was the power of leadership and the importance of leadership and the difference between leadership and management. Leadership is really what drives organizations, and management is contractual, right? I mean, we all have managers, right? Jay's got a manager, I've got a manager. If you've got a job, you have a manager, and within certain bounds, you have to do what that manager says, right? Or you don't have a job. But leadership is something different. Leadership is something that every morning when you wake up, you have a decision to make whether you're going to choose to follow someone. And the neat thing about it is you don't have to tell them, right? You decide it in here, not in your brain, you decide it in your heart. And when you have someone that you choose to follow, that you really respect and you believe in, you do your best work. And the few times in my career when I was working for someone that I didn't have that feeling about, I probably didn't do my best work. So what I always tried to do was develop leadership as opposed to being a manager. And I think over the years that probably assisted me, but it was never really a goal. It sort of unfolded. Thanks.
Hi, my name is Yash, and I'm a freshman here at McCombs. Thanks for coming out.
Thanks for your courage as a freshman to come up and ask a question.
Thank you. So you talked about how a key quality that helped you and that you think is important is being selfless. And like even in college or like before, like I've noticed that there's a lot of people who will take advantage of you if you are selfless and you really, put your whole into it. So have you like encountered that, and do you think it works out in the end?
Yep.
Oh, it does.
It's a really insightful question. Let me share a little bit of perspective on it. Business and leadership in many ways is all about trust. The first step to trusting someone else is vulnerability. The first step to acknowledging vulnerability is a willingness to expose yourself, your strengths and your weaknesses, right? I mean, we're all people, we're all a mixture of good and bad, strengths and weaknesses, or areas we need to improve on, right? we're all a mixture of that. One of the things that I've tried to do is every time I was promoted into a bigger role, I went out and had a profile done of myself by a professional psychiatrist, psychologist, of all my strengths and weaknesses. And then I gave that unedited to my new direct reports. The reason I did that is I wanted them to know that I was willing to be vulnerable and expose all the areas that I wasn't very good at. And I wanted them to hold me accountable to get better in those areas. I also wanted them to know that I didn't think of myself as some star or better than them. I was just like them, strengths and weaknesses. Along the way, to get to your question, Josh, there were a few people that took advantage of that. And the vast majority of the people didn't. because the vast, vast majority of people, in my opinion, my estimation, my experience, are people of high integrity and high character. And if you are willing to expose yourself and be vulnerable, they're going to treat you in an honorable way. The people that don't, they're going to be here today and gone tomorrow, off on their own path, and that's okay. But I'm going to be who I am, and I'm going to build trust with people who are equally willing to be vulnerable and want to be part of a successful team.
Thank you so much.
Great, insightful question. Thanks. Hi.
I just got butterflies in my stomach. First, thank you for coming in for
Thank you.
your truly authentic answers. It's definitely not coming off of a teleprompter.
No. I'm no good with teleprompters.
I am not a student of UT. I graduated from college a long time ago, but I am an entrepreneur, which means I get an MBA pretty much every other day.
Yes, you do.
So I just realized I have a Charles Schwab pen in my hand.
All right.
From my house, actually. I've come and gone with Charles Schwab. When I first started investing 10 years ago, I kicked it off with Charles Schwab, screwed some things up and left, and then actually came back full circle. And my advisor has moved on, unfortunately. So I'm curious as to how to go about actually matching up with the best kind of advisor. Is it based on age or demographic? Is it based on someone that sees it exactly the way you do?
Sure.
Or is willing to challenge you?
Sure. So we have an interesting philosophy at Schwab. Unlike virtually every other investment firm, we do not allow our individual financial consultants to create customized advice and strategies based on what they think is right. We do all that centralized so it's objective and done with much more sophisticated people. And then our financial consultants act as more of a quarterback working with the client. So, the way most firms do it is, you sort of got flip a coin broker, right? If you get a good broker, you might be okay. If you get a bad one, you're going to struggle. We don't do it like that. We do all of the planning and strategizing and portfolio development in a centralized manner. So with Schwab, what's important with your financial consultant is simply someone that you can communicate with and relate to. But they're not making decisions and making recommendations around your investing strategy. That all comes from a central team of objective people who have no axe to grind and aren't compensated based on what you do.
Okay.
So somebody you can trust, someone that you can believe in is what's most important.
Okay. Thank you.
Thanks.
Hi, thank you for coming today. My name's Tyler, and I'm a senior here at McCombs. I'm more interested in how you started your own company. You talked a little bit about it. Could you explain more about how your background in entrepreneurship really got you to where you are today and helped you to be successful?
Sure. Well, I probably shorthanded the story a little bit. So back to what happened with Hampton. So I cold called, as I mentioned, every day for a year, and I had no clients. I'm a little slow. I eventually figured out that wasn't working. But I asked myself, well, what am I lacking? And of course, what I was lacking was credibility, right? I mean, I was 22. I looked really young. I'm calling on these big companies, and they weren't going to hire me. So what I recognized is that what I lacked in credibility, the people that had credibility with these companies was their advisors, their attorneys, their accountants, people like that. So I stopped cold calling on companies and spent all day long, literally 7 in the morning till 10 or 11 at night, studying to pass all my actuarial exams and get a bunch of professional designations at the end of my name. I got all these letters I don't use anymore. Then I went and got certified by the Ohio Society of CPAs and the Bar Association to do continuing ed. Then I cold called on the companies, the law firms and accounting firms, and said, I'll come do your continuing ed for your professionals for free. That'll save you sending them down to what was Columbus at the time and save you a bunch of time and money. And of course, the goal was if I can get in front of these professionals and they say I know what I'm talking about, they're going to refer me into their clients. And that's what ended up happening. So I think the lesson, and that's where then we really took off in growth. I think the lesson that comes out of it is when you're an entrepreneur, you have to recognize when you're failing, but also recognize that that doesn't mean that you can't come up with another path. And just keep trying. Try different paths. Very few companies build a business plan from scratch, execute perfectly on that business plan, and have it all work exactly like they thought. You've got to be willing to make adjustments along the way. And that's what I did. Unfortunately, I didn't do it fast enough. I beat my head against a wall for 12 months, but But you just got to be willing to be flexible and realize that your initial strategy is probably going to need to make adjustments. Thanks.
Thank you.
These are great questions. I am impressed.
We have great students.
I am impressed.
Hi there. Second question. Are you familiar with the trading app Robinhood? And if so, how will that company affect yours?
Yeah, well, Robinhood is an initial effort by Google to make stock trading free, right? Free. How many things are free? No, what it really is a program where they're going to allegedly let you trade stocks at a zero commission. So how many people know where most of the money is made when you buy and sell a stock? Is it made on the $10 commission or $7 commission or $0 commission? No. It's made on what? The quality of the execution, the spread, right? The bid-ask. So if I'm buying $10,000 in stock and one person executes it and I get an execution of $10,000 and another person executes it and it costs me $10,050, what did I really pay for that trade? $50, right? There's nothing free. They may tell you it's a zero commission. They're going to make it on the spread, and they're going to make it on payment for order flow, the exact thing that the Michael Lewis book hones in on. So it's an interesting business model designed to capitalize on people who don't understand that there will be nothing free in the world and think that they're getting a better deal. Will it take some share? Yeah, it'll take some share because there's people out there who are always thinking they're going to get something for nothing, right? But there's no such thing as something for nothing. What we do when it comes to spreads is we publish the spreads transparently and all the time within our website. People can go out and see what we do. We file reports with the SEC so they see exactly what spreads are, and our spreads lead the industry in terms of the tightness of the bid-ask spread and what clients get executed on. There's no free lunch. Interesting model, no free lunch. Hey.
Hi there. My name is Cage. I'm a senior at McCombs.
Hey, Gage.
My question mainly got answered in the entrepreneurial question, so I thought of a new one.
Okay. Well, good. You thought on your feet.
Yeah. What experience did you have when you were younger that kind of gave you that intuition about studying business and that you wanted to go into it, and what made sure that was right for you?
From when I was really young, one of the things that was always intriguing to me was human nature. And as far back as I can remember, I studied people to the point that when we were in public places, my mom would say to me, Walt, stop, you're staring at that person or something. I mean, I would just always study people and try to understand what made them tick, what makes them do what they do, what made you get up and ask a question, what made you respond to me that you got it partially one answered and you thought of another one. Studying people, and I think in many ways that is a critical part of business, and I just wanted to be able to apply that when I got out into the working world. But a desire to understand people and learn from them and see what I could benefit in observing them probably was a big drive behind wanting to go into the business side.
Thank you.
Thanks.
Hi, my name's Parth. I'm a freshman business honors
I'm
student.
glad everybody didn't sit down when I said that there. What made you stand up and ask a question? I'm sorry, go ahead.
I was just wondering, what advice would you have for someone marketing a startup right now in the modern era?
Marketing a startup? Good luck. Well, I mean, it's pretty broad because it depends on what you're marketing and how unique it is and how differentiated it is. In my opinion, this is an era in which marketing and advertising, albeit important, is changing dramatically. Nobody cares what I have to say about what we at Schwab have, or what I have to say about Schwab. It's not believable, right? I mean, we live in a world of mistrust. That's the world that we live in. What matters is what does someone else say. So if I was trying to market a startup, what I would try to do is get my service or product out there. It better be good, and then I would transparently publish and try to get out there what others are saying about it. That would probably be the strategy that I would follow. We actually did that at Schwab. We were the first investment firm to put out on our website unedited, unfiltered ratings and reviews of all of our services. So a prospect of Schwab's can go out and look at it and see, those who give us 1 star and why, and those who give us 5 stars, but unfiltered, just put it out there. And I think that's the era that we live in this world of social media, and it's only going to continue. And you know what? It's probably good. I mean, we don't need to have a bunch of people talking about how good their products are, their services are. Let me find out from those who actually use it, who are more objective. So I would try to emphasize that. Plus, that's a whole lot cheaper than having a $400 million marketing budget like Schwab.
Great, thank you.
Hi, my name is Mackenzie. I'm also a freshman over in
Hi,
McCombs.
Mackenzie.
And you spoke a little bit about your desire to serve and how you do that through leadership. And obviously that's an advantage that you see in being a CEO, but what are some of the disadvantages to the position you hold? I'm sure there's people out here who one day dream of being a CEO, so that'd definitely be something valuable to know.
Well, I think one of the big disadvantages I mentioned earlier is people tend to think that, you're some image of what they believe a CEO is. And in financial services, it's even worse, right? I mean, I want to be the anti-Wall Street CEO. I mean, that's who I am, and that's who I want to be. And so I think one of the disadvantages is people want to label you just based on the title. The reality is, as I said, I'm no different. It's just there's a different title at the end of my name, but I'm a person like everybody else. And that's probably one of the big disadvantages. And I think what it does, and where it can get a lot of people in trouble, is they start to think that who they are as a person and what they do for a living are intertwined. And they shouldn't be. I mean, who I am as a person should be defined by what kind of, faithful husband I am, what kind of gentle father I am, what kind of loving son and loyal friend I am. That defines me as a person, not my title or not the number of zeros on my paycheck. And what I see is people get in trouble who are in positions that the world considers important, like CEOs, when they start to mix those two and think that somehow those are intertwined and who they are is defined by what they do. And I just encourage every one of you, as you get out in the working world, know who you are and keep that separate from what you do. You do something to provide for your family, to live your life, but keep that separate from who you are as a person.
Thank you.
Thanks.
Hi, Walt.
Hi.
I'm Holly, and I'm a 10-year alum from the University of
Hi,
Texas.
Holly.
I'm currently a member of the IBM team supporting Schwab, living here in Austin.
Oh, great.
My question is, what do you see being the biggest disruptor in the financial services industry in 2015?
The single biggest disruptor. Wow.
Our alums have good questions too.
I guess. Wow, that's a stumper. I don't know that I can give a single biggest disruptor. I think you have trends going on in financial services, and 15 will be a continuation of those trends. One is education. People are becoming more informed, right? I mean, the odds are if I walked in here and told you, hey, I got a great stock tip I'd like to share with you, most of you would doubt me in saying that. 20 years ago, a lot of you would probably be interested in what that tip was. So education is becoming a bigger deal. The consumer is becoming more sophisticated. Transparency is becoming a bigger deal. How many people in the investment world have been told the line, don't worry about the fees, all that matters is what your return is, because that's after fees. What a crock. But that was something that people have said for years, and you still hear that sometimes today. The fees don't matter, the after-tax return matters. Come on. Nobody knows what the return's going to be, but that person's going to get paid no matter what. So the consumer is becoming more sophisticated, and I believe those are trend lines that are good things and will continue to occur in financial services and investing. We certainly want to encourage them, but I think that's a couple of trend lines that will continue on into 15. Thanks. Hey.
Hi, I'm Zach. I'm a student at McCombs.
Hey, Zach.
My main question is, you mentioned that you think the financial crisis was more so a crisis of leadership. Could you elaborate more on this?
Sure. Well, again, things don't happen on their own, right? They happen because human beings, make decisions. And when human beings get caught up in greed, which, by the way, we're all tempted to do, right? Because we're all human beings. We all have that greed gene somewhere in there. It's just how we manage it. But when people get caught up with things like greed, they take risks, and they make decisions that maybe feed that greed gene but aren't necessarily the right thing for others. And so when I look at what went on with the financial crisis or the leadership crisis, it's really a crisis of the people that were in the leadership jobs in these companies. They lost sight of what they were there for. They were there to serve a customer or to serve a client. And if they did it well enough, that customer or client was more than happy that they made a little bit of profit. But instead, it became about getting served themselves. How big is my paycheck going to be? How big is my bonus going to be? And that's where we got into the crisis. So, I never fall for these things that label something that it happened. It's like work-life balance, right? Work-life balance doesn't happen. You set your priorities. Financial crisis doesn't happen. Leadership crisis happens because people in positions of authority make decisions that aren't the right ones. So,
Thank you.
thanks. And by the way, I got to give credit to Bill George, who's retired CEO of Medtronic. He was the first person to coin it a leadership crisis, not a financial crisis, so I don't want anyone to, I'm not taking credit for that.
Hi, my name is Ron. I'm a junior at McCombs, and I just wanted to ask you if there was one thing you could change about Charles Schwab or what you do in your day-to-day job, what would that be?
There was one thing I could change. Yeah, it's pretty tough as CEO to say that I would change it because I probably could. I think the biggest challenge, the biggest thing I would probably change is, post Dodd-Frank, we have a whole new regulatory world, and that regulatory world gets into a little bit of kind of one size fits all. And so a firm that operates real conservatively like us is still under kind of the same regime as some of the big global banks that operate with a lot of risk in their balance sheet and take a lot of risks in their operating model. And yet we're still subject to sort of the same regulatory oversight. I guess if there's one thing I'd change, it's that our regulators would be able, and they understand a little bit themselves too, they got to work within the guidelines they have. But I'd like it to be a little bit more tailored to the actual risk that a company takes. That would probably be it. That was a dodge, I have to admit. That was a dodge. But I would like to change that.
Thank you. I think we're about out of time. I was reflecting as we're going through this that there are many times, thankfully, where it's really cool to be at the University of Texas at Austin. This is one of those times.
Thank you.
Thanks for coming. I think I was taken by something you said, that something like, I'm no different, but I think at the same time we got to see that you're special. So it's a humbling experience, and we thank you for coming.
Thank you so much, Jay. It's such an honor to be here. Thank you.
I'm going to turn it back over to Mandy.
Thank you very much, Dean Hartzelt and Mr. Bettinger. Thank you for taking your time out of your schedule to speak with our students. I know that we will be able to take your life lessons and apply them to our own lives. As a token of our appreciation, the Undergraduate Business Council would like to present Mr. Bettinger with his personalized Stetson cowboy hat in recognition for your participation in the VIP Distinguished Speaker Series.
Oh my God. Thank you so much. All right. Which is the front?
I believe this is the back.
That's the back. All right.
There you go.
I like it.
Awesome.
Oh, there we go.